for coffee. And I don't want to sort of harbour on about losing traders, but I've learned so much from losses. I think we learn as much, if not more, from losing traders than we have from winning traders, and from losses. So the number one thing, because you've got to remember, this is an upside down business. If somebody comes to me and says, oh, Vince, I've made 20 losing trades in a row, my ears prick up straight away. Because what am I thinking? Great, I can do the opposite to this guy. This guy's so bad, he's good. So, and some of you know the story. When I was a broker years ago, I had a plumber, and he was really made a lot of money, but he was such a bad investor. And every time this guy wanted to buy, the markets would go down, because he'd read all these newsletters, all these chip sheets. This was pre-internet days. Probably even worse than the internet. So he used to get Penny Share Guide and all the rest of it. And he said, I want to buy so-and-so and so-and-so. And I said, oh, you've got Penny Share Guide, haven't you? And he goes, how do you know? And I go, well, of course, because we had the same calls people asked. Anyway, he then ran out of money, of course, because he'd blown up all his accounts. I had a dilemma, because this guy was my contraindicator. And I thought, well, what do I do? Do I give him some money to keep him going? You know, just to fund him? Because then he stopped calling because he's got no money. And I've lost my contraindicator. And then that's obviously with seasonality, and obviously there's other ways we can find. But if somebody is that bad, it actually becomes good, because we can just do the opposite. And that's the nice thing about markets. Remember, although I've been bullish the last few years, and somebody's seen some of my calls when I said Dow would hit 14,200, and everybody laughed, I'm a bear as well. I'm happy to make money on things going down. You know, I've got no problems with short trading. Neither should you, and there's plenty of vehicles we can use to short. So I've got no problems on being short. But the basics before we break: too big a position for the account size. I see that all the time. They're trading markets they can't afford, using the wrong products. Everyone wants to trade the Dow, or they want to trade the DAX now, seems quite popular. Taking profits too soon because they're messing around. I think now with these phones and the watch and all the rest of it, it's going to get even worse. Death by 1,000 cuts. This might seem a little bit different to what the textbooks have said, but I also see people who say, oh, I'm only going to lose 1 or 2% of my account on one trade. But they've got such a small account, the trade has got no chance to breathe. So they keep chopping it too soon. So it's what I call death by 1,000 cuts. That also happens when you overtrade, because when you overtrade, you're really scared because you're right on the margin, aren't you? Not admitting you're wrong, sunk costs. We see this a lot in businesses. If you've ever watched these Ramsey programs, the guy's restaurant is really failing. He's put all his life savings into it. He's putting more money. Truth is, the best thing that can happen, he just shuts the restaurant down. Wild mood swings, I've always told, they're never happy, because if they make $200, £500, whatever, oh, I should have made more. If they lose, then obviously they're unhappy. So they're never happy, and that's a true case with that. Trading to escape. It's very, very important that you're not trading to escape your problems or because you're bored. Yeah, so you come to the screen. If you want that, go and play Texas Hold'em or whatever. Victim mentality. Oh, I only have a small account. I can't trade like you. Or the brokers have cheated me. We'll talk about, in my next session, we'll talk more about spread betting companies and what really goes on. Never happy, coulda, woulda, shoulda. If I traded more, I would have made more money. Yeah, fine. I only could have, if I'd got this stock. They're always in this sort of behind. They're just never happy. It's the easiest way to put it. Poor discipline, no real plan, self-destruct. And the average client account probably burns out in about 6 months. And then they go off and slag me off or do whatever they have to do. Right, we're going to break for tea and coffee. But with that, a little joke that some of you have heard of before. What's the difference between when you pray in church and when you pray in front of the screen? When you pray in front of the screen, you really mean it. So with that, we've got tea, coffee upstairs. We're going to be back at 12 o'clock here with Jim Mellon.